I want that cash, I'm always moving forward.
And I was just explaining to Alyssa that I was doing the same thing, and a part of the problem is the way that you were introduced to Forex, being taught that you need to take trades on the hour and the 15-minute charts, and you need to pay attention to, and basically like your 4 hour and your day chart are the highest time frames you'll be able to search for information on, when in reality the month, the week, the day, and the 4 hour are the charts, especially the month and the week are the ones that you really need to pay close attention to, because those are the ones that's going to create a lot of money for you. So that's one thing I just want to go over with this new trading style. I've been meaning to show it. I haven't really been posting nothing lately because I've been really experimenting with it, and I have a new the trading style is different, and also I want a big focus on risk management. Like, that's super important. Risk management, like, yeah, like you have to pay attention to that. The way I do it now is, and I'm explaining it once on the charts, once I'm gonna let y'all see it, but the way I do it now is, you have, say for instance, you have a trade you like it, you confident. I only risk 3% per entry now. Meaning, I don't give a fuck how I feel about the trade. If I'm not confident in the trade, but I still want to take the trade, I'm going to risk 1%. But if I'm really confident about the trade, I'm going to risk 3%. But I'm not going to go over 3% because that's keeping me in it. And even if I blow that 3%, that 3% shouldn't be enough to blow my account. And not only it shouldn't be enough to blow my account, but it shouldn't be enough to, like, where I have to lower my leverage size. You know, like sometimes you'll take a trade. So say you go standard 1.0 with $500, you blow $200. Now you have a $300 account, and you can't even do a standard because you risk too much. So this 3% is showing you, like, okay, you get into a trade, you get stopped out, you see that it's going the other way. You can take that same trade, that same 3%, and go the other way and still make your same money. Right. Oh, that's all for the show. So I'm finna let me see. I'm gonna wait 2 more minutes. Let's see. Let me make a call right quick. Hold on. Let me see if you want to get in it. What up? What you doing? Yeah, I'm trying to see, man. You need to tune in. I'm starting this bitch right now. You probably ain't even by your computer or on your phone. And look, it's the perfect time, man. Come on, be a refresher. Oh, okay. Well, it's the ticket, my nigga. So whenever you're ready. But alright then, I'm gonna let you go. I'm gonna get on this thing and start doing this little markup right quick and show this right quick. Yeah. Oh, you tripping. You gotta get some back, bro. Come on, download it right quick. Alright. Alright, so I ready? And y'all don't have to mute it when I'm talking. Y'all can talk. If y'all have any questions, I feel more than free to answer. Ask me, because it's very important. Alright, so let me show my screen. How can I share my screen? Okay, here we go. Alright, y'all should be able to see it, huh? Let me know if y'all can see my screen or not. Wait, shit, hello? Hello?
Yeah, what up?
Alright, alright, y'all ready? I'm finna I'm doing.
Yeah.
Let me see this link right quick. All right. So first, the most important part about this is a way that you can literally make money on any pair and at any time you want to. This is not something where, oh, my pair not moving, I can't make no money, or I don't know what's going on, or the market is consolidating. This is something that you can do anytime you want it. And I purposely picked this pair because it's a pair that's not really moving too much in any direction. Overall, I would say that it is in consolidation. So I wanted to pick one of the harder pairs to get the hard analysis out the way. Then, your next analysis, it'll be easier. Hold on. Let me see. This link here. Telegram. Paste. 1 second. Okay. So we got EurGbp. All right. So first off, we're gonna look on the month chart. Okay. So we on the month chart, and we really just want to see where it's at. All right. So we see that this is the last place it touched right here. The last few months since August 2019, it's been bullish. It's been bearish, but around this same zone is having trouble. Okay, so now let's see. Let's see what we're doing. We're going out to the week, and we just want to get a feel and see, is this zone down here a true line? Which I would say it is. So I go back to my month chart, and I just mark my first line of support and resistance, which is here. And I don't really say, like, people like, is this support or resistance? They're literally the same thing. It just depends on if you on top of the line, under the line. So I just say support and resistance to keep shit a lot easier. But look where we at right here. Okay, so we right here. This is what it's looking like on a week. Came down, boom, looked like a fake out just to touch these little wicks down here. So I'll draw another line somewhere around here, just touching all these weeks, showing that it still is an important zone. Then I'm gonna look above it and see, okay, where could we possibly be going? It's hard to find a spot on the week, so I'm gonna go down to the daily, and I'm gonna look for those zones. Okay, so like for example, this would be a zone. And I'm showing you this trade. The actual move has already been made, and you're going to see why. But I'm showing you, like, how to trade this kind of stuff. So you want to, the month and the week is what you want to use to kind of get you, an understanding of what's going on, the overall direction. But it's the 4 hour and the daily what you want to actually use to enter your market, enter the charts, see what's really, really, really happening with these pairs. Okay, so we got, let's go to the 4 hour, with day. This is an important line right here. And first, let me explain to you why we're on the month chart. This is why we're on the month chart. This is all about money. How much money can you make? Okay, from here to here is 180 pips. Okay. From here to here is 700 pips. That's a lot of space. That's a lot of money we can make. So while they got people on a 15-minute trying to trade from here to here and catch these 12 pips, you done did the same type of move, except it's on a way bigger scale. Off bat, just by you trading off the month, the week, and the daily, you are automatically, your TP1 is going to be way higher than the next person's. That's another thing that really got me excited about this, because one thing I was doing, I'm trading on a 15-minute chart, but I know GBP AUD move crazy. I know at the end of the day it'll shoot up 100 pips. but I'm trading. I'm trying to get 100 pips on a 15-minute chart, and I'm doing that completely wrong because I don't see what's really, really, really going on in the market. Okay, does everybody understand? Am I talking too fast, or anybody need me to go back and say anything else? Okay, all right. So for example, okay, now let's go back to the day. All right, so this is where I would set my TPs. Because, okay, now we see that, first off, we see that it's buying. Why is it buying? Because the overall in this consolidation on the week, let's see, the overall in the consolidation, hit up here, boom, 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 rejections. But once it hit here, 1, 2, 3, 4, 5. 5 different rejections. So that doesn't mean the 6th time it touch it is going to go through it. No, it's probably going to reject first. So let's see. Now, once we see that the direction, the possible direction, then you want to go ahead and be looking for your buys. I'm not looking for sales right here because this is that line. Only way I'm looking for sales is if it breaks below and shows me that like it has to break, hold, and you got to show me you want to drop. Not just no fake out right here, because if you would have took this sale right here, this is just, it's tapping the same line that it tapped all these times. I'm talking about a real breakout. Like you come way down here, even if you retest, I know you want to break because you created your own new low. So I know you coming back down here to at least fill that wick. So we know that we buying, okay? So now let's pay attention to this on the daily chart. We got, how did I do it? I marked it up. Okay, this is how I did it. So we got this right here. This is sometime we touched it, and then we got this one right here. Boom. Pay attention though. I'm gonna move this out the way. Let's pay attention to this candle. This long candle. What is this showing you? This is telling you, bless you. This is telling you that with this long ass 200 pip wick on this candle, it's telling you that bulls are trying to enter the market. It dropped 200 pips and closed 200 pips above. You don't see no 200 pip wick. And then look at your pair. This is EurGbp, meaning it took a minute to take in 200 pips. Because these pairs might move 50 pips in a day, 40 pips in a day, 75 pips on a good day. But they don't move that fast. So you got to pay attention to everything that the market is telling you. Like I say, this is the information that you don't see on the 15-minute chart. Because you see on the 15-minute, all you see is this, what looks like a fake out. So it looked like you came way down here and faked out. But in reality, it came down here, stopped some people out, came down here, pulled some more orders, came and closed up here. So what that means is this was too strong of a rejection. The bulls are ready to enter the market. Okay, so let's go. It's actually, now that we know it's buying, and all right, do y'all understand why it's buying?
Projecting that support.
Because it's right here. This is why it's buying. Because it came down and it actually broke out, came up, and started retesting this. So this is why we're actually looking for the buy. Okay? Now, as far as our entries go, I like this TP right here. I like this TP right here. And I'm going to give you one more. I'll take this one under here. Do I want that one? Let me see. Yeah, I'll take this one just to be safe. Okay, so this is a total of 190 pips. Okay, cool. So now we got 190 pips. Now that means we got a lot of room to work with. We can make us some money because this is a 200 pip trade. This ain't no fucking 100 pip trade. No 15, no 30 pip trade. This is TP. If you hit TP 1, 2, 3, then you up 100. You up 200 pips. All right. So now let's bust down to the 4-hour chart. Okay. we see on the 4 hour chart. Look at this. Same fake out. This fake out right here, this one on December 13th, right here, this fake out. This is the one I had did earlier. Okay, I remember now. This and this is the same thing. This one right here. It's the same exact thing. It's a fake out. Boom, and respect this same line again. Okay, so now we know this is in a crucial zone. So now let's actually draw our zones. Okay. It was not even draw them, but let's tighten them up. Okay, boom. All right, so this is where I want to enter this trade right here. Boom. I want to enter the trade right here. I want to stop loss below this line right here. So I like my stop loss lines to be red, my entry lines to be blue, and my TPs are green. So you can clearly see what's going on. Okay, so now what happens is this line becomes irrelevant, but because it rejected off this line, it's not. But this one definitely is irrelevant because from where we are, that line way down there is 200 pips, and we see that it looks like it's trying to buy. So we not worried about down there. We worried about right here. So another indication that it's trying to buy, look at this long wick. Okay, so when you're studying your candlesticks, you have to really pay attention. And I'm not saying studying them on the app. I'm talking about reading them and seeing what this candlestick means, what this candlestick means. What you do is, if you see a candlestick on the 4 hour, like a doji, a long ass wick like this, go down to the 1 hour and you could see what really happened. It broke through, fake out, dropped right back below. That's what that doji was. But what you have to realize, every doji isn't a rejection. Some dojis are rejections from the top and they're just rejected, and some dojis mean that it came up here to reach a new high, meaning it broke way down here, boom, 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 came up here, closed up here, but it came up here to reach a new high, retest, and now it looked like it's possibly on its way back up. So how I would trade this is, I'm sure it's buying, but my emotions are not involved because it doesn't matter. I just want to take a buy. I just wanted to buy. If it sells, cool. I'm not tripping, but I wanted to buy, so I'm taking the buy, and I need to set my stop loss. When we trading like this on the daily, okay, so let's go back down to the daily. We have our zones recognized. Entry, TP, and let me write them down for y'all right quick. And I say entry zone because you probably are not going to hit that spot every time, that one line. But if you take a zone and your TP or your stop loss is 5, 6, 7, 8 pips away from where it would have been in that entry, you're still good. It don't have to be, perfect. But that's where we at. And I label my charts because when I get on my phone, I like to know what's going on. Sometimes I be forgetting what's really happening because I don't have my charts marked up. So I like to always make sure my charts are marked up, and before I leave my computer, that my phone reflects the same thing. Okay, so this is where we at. We got our entry zone, we got our stop loss, we got our TP1, TP2, TP3. Okay. Boom. I want to enter right here because this is the zone where it had the most recent confluence. It rejected off this. It broke fake out. Boom, rejected. This is the kind of, pay attention to this right here. So we got this one now, and we got this one. Make sure you pay attention to all of these spots that's being rejected and it's trying to create new highs and get back to these spots. Okay. So now, once you get into this, once you get into this trade, say you get into it at the entry zone, right here, bam, 30 pips. TP1 30 pips. I usually take TPs anywhere between 20, no, fuck, as many as low as possible. That's always best. But usually it be anywhere between 20 and 50 TP, 20 and 50 pips for my stop loss. I don't have to have no 10 pip stop loss because I'm trading on a day. So in a day, this bitch could go test 30, 40, 50 pips before it go. It can retest 30, 40, 50 pips, put you in a negative 40, 50 pips until it decides to make its move. That's why you have to be able to have that proper risk management. Okay, so this is how I'm taking this trade. I'm getting into it right here in this blue zone because it's showing me the signs right here. Boom. It's showing me this doji where it created a new high. It's showing me a fake out. And like I say, overall, I say it's buying because on the month chart, every time it touches this line, it buys. Look at this long doji. It looks like, boom, come up. On the week, let's see what we closed on the week. We closed bullish engulfing on the week. So I'm expecting a continuation to the top. But look at my TP1. My TP1 is right here because this is where it had trouble. Even though it's buying, I'm saying that it's buying from here to here. It's not guaranteed to buy from here. It's not guaranteed to buy from here to here. But it's going to come back right here and touch this zone, I'm pretty sure. Because this is the last zone. It's easier for the pair to come up here and touch this zone than come down here because from here to here is 14 pips and here to here is 27. But if you want to say it like this, you can say the move hasn't been made. Boom, this 40 pips, this 30 pips. But if you're looking, fake out, boom, 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 struggling, came above, reject. This is where you want to enter the trade. When it come back, retest off this and it reject, and you get that candle right here. And if you're not sure about this candle, this second candle, perfect, because it's a bullish engulfing. And this is my TP1. So how I actually take my entries, I got an app called Stinu. It's a really good app, and it calculates the risk management for you. It does all the work for you. So what I do is I get on the app and I say I want to risk. I'm going to do it right now, actually. I'm going to do it right now. I'm going to tell you exactly what the numbers are telling me. It's saying I'm risking 37 pips, 33 pips. So we got, let's just say realistic. I like to do realistic things. I'm not going to do no $10,000 account, no $20,000 or $100,000 account. I'm gonna do a $500 or $1,000 account, something realistic. You know what I'm saying? Don't do nothing, because when you look at them different numbers, you trading your demo account super big numbers, them small numbers that really mean something. You're not gonna think they mean nothing because they're not as big as the numbers you're used to seeing. So if you're gonna be in a demo, trade realistic. There's no such thing as practice. There's no such thing as practice makes perfect, because if you're practicing the wrong way, it doesn't matter. Only perfect practice makes perfect. And once you understand that, then you'll start doing things differently and you'll work harder when it doesn't count, because it does really count. But let's say we do $1,000 account. Okay, let's say I want to risk 3%, and I'm gonna go 33 on this app. I'm gonna go 33 pips for my stop loss. On currency pair EurGbp. This fucking app be doing stupid shit sometimes. See, let me do it on here because it's tripping. Let's go 1,000. It let me. It do what it want to do. This bitch telling me something about 33 pips. Good. What the fuck, bro? Why is it saying something about market price? Hold on. I know it's gonna do this shit too. As soon as you want to show somebody something, it don't work. All right, so fuck it. 3% of $1,000 is $30. So you're risking $30 per entry. This is not $30 per trade. This is $30 per entry. Okay. So by you risking $30 per entry, what's happening is you're saying that at this entry, I'm willing to lose $30 of this $1,000. Basically, you're already saying that I'm pretty sure I'm going to lose this $30 because you have to be okay with the loss. Don't worry about how much you're going to win. Worry about how much you're going to lose. That's what's important. How much can you possibly lose on this trade? That's what's really important. Okay, so I'm going to risk 30% on this. I'm going to risk $30 on this trade. So I'm going to get in my entry. Set it up. I got 0.3, but I'm going to take 4.3 entries, meaning I'm going to risk a total of $120 or 12%. That's still not a lot of money because it's 12% of your account, and niggas leverage 50% of their account their first trade sometimes. So 12% isn't a lot, and this is what's going to help you with those entries and with that risk management. And if 12% is still too high, oh, damn, it's telling me I'm running out of time. If 12% is still too high, then you can risk fucking 1%, and that's gonna be 4 different entries. That's 4. Or if you want to do 2%, that's 8. So you'll have a total risk of 12%, 8%, or 4%, whichever one you're comfortable. But what I'm doing is I'm taking my first TP off bat for these 43 pips to TP1. I'm taking 2 entries to TP1, meaning my 2 of my entries automatically getting stopped out at TP1, meaning that's gonna put me in profit off bat. And what that does is that controls that emotion that everybody have when you just set up a good trade and they hit TP1 and break through, but you got out at TP1 and you're like, oh shit, I should have held it. So you get back in and then it reject and you lose money, the same money you just made plus more. Or it's the times where you had it, you didn't have no TP because you thought it was going to hit TP3, so you had it around there, and it hit TP1 and shot right back down, and you lost money, but you said, oh, I should have took TP1. So this is going to help those emotions. That's a big difference I noticed in myself when I started doing trading this way. It helped those emotions of me saying, oh, I should have held it, oh, I should have took out. It's the best of both worlds. So these 43 pips on 2 entries times a 0.3, so let's go $3 a pip times $43. That's 100